Much, Brent. All right, so I just want to do a quick introduction. My name is Julie Wright, and I've been an entrepreneur for 18 years. I started my business, I got my tax ID number about 2 weeks after I graduated high school in 2003, and have been working for myself ever since. So my company started, I was a photographer doing a lot of senior pictures, families, weddings. And then my company grew to do commercial photography, and now I own a full service marketing agency. We're a team of 9 that builds websites. We do social media, graphic design, photography, and videography. And so I really do have a passion for entrepreneurship, for business owners. It is a tough job, but it is so rewarding. And oftentimes people ask me why I became an entrepreneur. And I always go back to, if you're someone that wants to work hard and wants to get rewarded for your hard work, entrepreneur is really where it's at. I learned very early on in my first couple jobs that I was willing to get there before anyone else. And I was willing to stay later than everyone else. And I was willing to do the dirty work that no one else wanted to do. And I was willing to cover for others and go out of my way. And then my paycheck would come and it would be the exact same as the people that I covered for, and the same as everyone else that spent their breaks standing outside as I was covering their tables as a waitress. So I discovered pretty quickly that, if I'm really willing to work, I have the drive, I have the ambition, I can wake up early, I can stay up late, I can do what it takes, but I want to be rewarded for that in some way. And so through financial freedom, through time freedom, and just really continuing this education, continuing to grow, those are some of the reasons why I love being an entrepreneur. And so no matter what state you're at, I would love to talk to you, whether it's still just a dream, whether you're in the grind every day. But I'd really like to commend you for being here, because part of being an entrepreneur is you have to seek out these opportunities on your own. They're not just given to you maybe in your 9-to-5 job. And so while you're not getting paid to do these opportunities, this continuing education is really invaluable. And the growth that you'll see in your business, in yourself, in your personal life, and in your family, you're not even be able to measure that. Hopefully what you learned today, you can pass on, even if it's just to one other person, and not only better your life, but better their life as well. So with all that being said, this is the first week of an 8-week series. And I'd like to invite you to all 8 weeks. I'm going to share what those weeks are going to look like, but also know that if you can't make all 8, that's okay. If you can just make 1 or 2, if you want to pick out the ones that you feel like are most relevant to you, that's okay. But just know that we will be here for the next 8 weeks at 9 a.m. every Wednesday. And any of these that you can make, or if you want to invite someone along to, are only going to improve your business. So I did include that in the chat box. If you guys want to access the chat box at any time, there's the notes from today. There's the class for next week. Next week, the topic is choosing a social media platform. So social media is something that's often overwhelming, and we always recommend you don't have to do it all. There are probably 8 or 9 active social media platforms right now, and you don't have to do them all, but if you can pick the 1 or 2 that's going to influence your target market, that's where you're going to see your best return. So we will help you next week determine what platform is best for you. So today, let's kind of dive into our class today. I guess, and at any time, with this being a small group, if you have questions, feel free to unmute yourself. If you want to put them in the chat box, if that's easier, I'll try to keep an eye on that, and Brent can kind of help me watch for those questions in the chat box. Zoom has a little feature where you can raise your hand. If that's easier for you to, raise your hand or ask a question, whatever works best. There's a little reaction box, so if something, sounds good, if you want to give a thumbs up or a cheer or a clap, that's always helpful as well. But again, you can raise your hand that way as well. So, okay, now I'll lower my hand. I'll still cheer though. All right, so let's go ahead and dive into today's topic. So today we're going to talk about setting your prices for profit. Now, while I am not an accountant, And some of this you may want to run by an accountant or a number person. I do understand how important profit is and how at the end of the day, as much as you love what you do, even if you love it with every ounce of who you are, if you can't make a profit, in the long run, your business will not be sustainable. And so if you want a sustainable business that'll last for 5, 10, 15, 20, 100 years, if this is a business that you want to be able to pass down to your children, to grow, to have employees, profit is something that we have to talk about. And oftentimes it's kind of that elephant in the room. But we know that when we shop, the company makes profit. If you buy something from Walmart, you know that they make a profit off of that. So it's not a secret that every company makes profit. That's not a secret. But what is a little bit not talked about is how they come to those numbers and how much profit they make. Now, once you start making profit, that's really when you need to get your accountant involved. You need to make sure that you're paying taxes on the profit you're making. That's a whole nother conversation. We're not going to go into all that today, but the first step is to make a profit. Then once you do, make sure to connect with Pete or other people who can get you in connection with a team member to help with the accounting side. So I'm going to go ahead and share my notes here, and I hope you follow along. I did include these notes in the chat box, and I would encourage you to download them. You can look back at them later. You can share them with others, because it's going to be a lot that we're going to go over in just this 1 hour. All right. Can everyone see that screen okay? Brent, do we have any trouble viewing that? I'm just going to get it so I can see it. All right. Good job, awesome. Okay, so I made a worksheet that is a very simple kind of 8 steps. Now, all of these steps, you do not have to do all 8. This is really just some very basic terms. I'm kind of understanding it, and I'd really challenge you, once we go through this today, I would challenge you as you're out shopping to kind of recognize which one of these tools they're using to set their profit. Now, this series is a little bit unique because I'm going to take one step back. These tools are based off an Initiate program that Native 360 offers for free. It's an amazing tool that I hope we all take advantage of. And so a lot of the information we're going to go over today, the calculators, everything is pulled off this Initiate tool. So I want to show you really quick. If you haven't done this, so if you go to native360.org, that's going to be the first place that you're going to want to go to. And then all you have to do is click on Small Business Tools, and you're going to want to click on Register. And if you go here, it's a very simple, all you have to do is fill this out and you're good to go. It's completely free. And then I'll kind of show you what it looks like once you get into the Initiate. So I'm going to go ahead and go back a step and log in. Once you create that the first time, then all you have to do is log in the next time. And Initiate has a variety of tools that you can learn from. So through this 8-week series, we're going to go through 8 that we picked out that we felt were, very important and kind of a first start. But there are tools on money, on marketing, on management, every type of thing you could want. So I'd really encourage you to go to native360.org, click on the Small Business Tools, register for Initiate, and then once you're in there, start taking advantage of the tools. Now, on the notes from today, if you go down to the bottom of the notes, there's a link, and that's going to go to the exact lesson that we're going over today. So I'm going to show you where that is. So these are the notes from today that I included in the chat box. And if you go to the very bottom, you can click right here. Oh. And that's going to bring up the exact page that we're working off of. So I would really encourage you to spend some time. We're going to be talking about a calculator today. The calculator is right on that page and it's a free tool. All right. Are you ready to start? Everybody's good to go. I'd encourage you to grab paper, pencil. All right, it's 9:15, so we're gonna go here for about a half an hour or 40 minutes. Feel free to jump in with questions, and then we'll leave about 10 minutes at the end for questions. If you have a unique scenario, something that pertains to your business, let's talk through that at the end. So kind of get the wheel spinning, and if you have something that you're trying to set a price for, as we're talking, kind of make some notes of maybe what it is. We're going to need to know your cost of it. We're going to need to know what you want to make as profit, your retail price, and we can run some of these calculations together. So if you're brave, let's kind of get those wheels spinning, and we'll get back to that at the end of the class. Then we'll wrap up here right at 10 so you guys can get on with your day. All right, so setting your prices for profit. So number one, we're going to talk a little bit about the different reasons that we set prices for profits. So obviously, one of the key components of running a successful business is finding the right price. If your prices are too high, customers might go elsewhere. If they're too low, you might end up eating your profits. Now, we all know that, right? We know that we have to set the right price. But oftentimes there's not much education on how do we set that. So today we're going to go through some different ways. One might work better for you than the other. So the first thing we're going to talk about in 2 and 3 is understanding what markup versus margin is. Now these are two words that are thrown around quite a bit. You know, oh, well, people will say, well, what's your markup on this? Or, you know, what's your margin on this certain product? If you are selling anything retail, whether it is a service or an item, these are two words that you're not only going to need to be familiar with, but you're going to need to know these numbers on the product you're selling. So it's not as complex as it sounds, and sometimes you just have to wrap your head around it a little bit. There are great resources out there, not only through Initiate, there's great resources on there. Also on YouTube, there are probably 50 videos explaining markup through versus margin. So if you want to explain a little bit deeper, or maybe you're not quite getting it, it's a little bit of a process. So I would encourage you to continue to learn until you have it down packed. So let's talk about markup a little bit. Markup is the increase added to the cost of a product to arrive at the selling price. So to determine your markup, you're going to take your profit minus your cost, and that's going to determine your markup. So let's go through this here just a little bit deeper. And then if we're determining our margin is what's left over on the scale of the product after accounting for cost. So to determine our margin, we're going to take our profit over our retail price to equal our markup. So when we really look at it, profit is always on the top line. Your cost is going to be on the bottom side when we're talking about markup, and your retail price is going to be on the bottom when we're talking about margin. And so that's what is going to determine this a little bit. So if we do a simple calculation, and we can run through this towards the end, but let's say that I am selling a wedding cake for $100. My cost is $80 and my profit is $20. So we have those same three numbers, $100 of, that's my retail, the profit is 20 and my cost is 80. So by putting those numbers where they go and doing that simple division formula, that's going to help us determine our markup and our margin. Now, remember, for best practice, always determine your gross profit margin goal first. So that means gross is when we take out all of our expenses first. And when we think of gross, oftentimes we think of something simple. Like I think of maybe my actual costs, my, if a wedding cake, I think of my flour, I think of my sugar, I think of the frosting, things like that. But you're also going to have costs like the building that you're in, the insurance you pay, the spatulas that you're using. Now, obviously, you're not going to throw away that spatula the first time after one cake, but let's say that that spatula only lasts for 50 cakes. You're going to want to divide that cost of that spatula by its lifespan. And so really, if you can determine as close to that number of your costs as possible, that's going to make that number that much more accurate. We'll come back to this here in just a little bit. But again, you were really working on the same numbers, just your denominator, your cost or your retail price is what's going to determine if it's your margin or your markup. So let's talk about that gross profit margin a little bit more. So first, let's define a gross profit. A gross profit is what a profit a company makes after deducting the cost associated with making and selling the product, or the cost associated with providing its service. So again, that's after deducting all the costs. Your revenue is going to be your income generated, and then your cost of goods sold is going to be a direct expense related to producing the goods and sold by a company. So this may include the cost of raw material, the amount of employees, all of those things are going to be your cost of goods. Okay, so these are some general terms that are a little bit complex, probably a little bit beyond a 101 class, but these are words that we need to make sure are part of our vocabulary. We need to understand what our markup's going to be, what our margins are, what our gross profit is. And really, once we understand all of these numbers, we can have a clear understanding of how we should set our prices. So we'll come back to this at the end, but let's keep moving for now. So now we're going to see what it looks like with that markup percentage. So we're going to see, now that we understand a little bit what markup is, we're going to figure out how we can work that backwards to set a price. So this is one way we can calculate our selling price. So retail pricing. Retail pricing allows you to mark up the prices of an individual product based on factors such as supply, demand, and competitor pricing. All right, so we are going to, for this example, we're going to take the cost with the markup, and that's going to give us our retail price. So in this example, let's say that I have this water bottle here, and let's say that it cost me $10 to get from my supplier, but I don't know how much I should sell it for. Now, I overheard someone say you should mark up water bottles by 30%, but if you don't really know what that means, let's go ahead and calculate that. So we're going to use this in this red box's retail price formula. So how much would you list a product for if the cost to you is $10? Now, this is just a flat price formula. We're not factoring in insurance, shelving, utilities, all of that on this model. We're just simply trying to price it. So let's say that the cost is $10 and we want to mark it up by 30%. So what we're going to do is we're going to take our $10 on top, divided by, we're going to take 100 minus 30. This 30 is for our 30%. And this is always going to be 100 because this is how we make that percentage. Then we're going to times that by 100, and that's going to get our retail price. So it equals 14 cents. This would equal 14 cents times 100 equals $14. So if we have a $10 item that we want to mark up 30%, our total would be the $14. Now let's say that we want to mark it up by 40%. We would do the same calculation, but we just put in 40 as this number here. If we want to do it as 15%, we would do it here. And that's how you can kind of figure out, based on your markup percentage, if you want to price things that way. Now there's kind of pros and cons to each thing. So a pro is going to be, it allows you, it's fairly simple to calculate, and it really makes sure that you're doing things at a correct markup. The con is it can be time and labor extensive, and it's not always a set formula. So 30% is kind of a rough idea, but there's a lot of other factors that play into that. So we'll come back to this one here in just a little bit. Another strategy for setting your prices for profit is there's kind of three main types that you're going to see. And again, I encourage you, when you're out at the store, look for these and see kind of how big retailers do it. So one of them is called bundle pricing. So with bundle pricing, you package multiple products together and sell them to the customer for a lower price than what they cost separately. Have you ever seen this where it's, maybe individually they're $5, but you can buy 3 for $12? That would be an example of bundle pricing. So the pro is it helps us sell products with low demand. So maybe you have a product that's not moving very fast. You could bundle it together, and that discount might drive a new type of traffic. Another pro, a good thing, is that it adds value to the buying experience. A couple cons, it might discourage buyers who only need one. I know I've been in that situation where it's a really good deal to buy 3, but I really only need 1. So I might decide to go with something else because I really don't need that many. Another con is it might reduce profits, and it really only works with a combination of other strategies. If you have a whole store full of products, you can't really bundle everything together because sometimes people just need to buy individual things. Let's talk a little bit about discount pricing. So with bundle pricing, you package multiple products together and sell them to a customer for a lower price. With discount pricing, you're just going to mark down one thing. So you might just run a sale on a particular item. You might, discount pricing could be like Black Friday sales. It could be any kind of Memorial Day sale, Labor Day sale, Fridays, the green tags are discounted. Mother's Day, maybe all mothers get a 10% discount. Discount pricing is something obviously we see a lot, and there are definitely pros and cons to pricing with discount pricing. The pro is it attracts a lot of business. Everyone loves a discount. The con is that it can offload another pro would be it can offload your out of season inventory. So we always see there's a couple boutiques right next door to me, and as soon as fall starts going out, all their fall clothes go on sale. And then the next season, all their winter clothes will go on sale. So a pro with discount pricing is you're able to offer discounts on specific items. So it's a great way to get rid of things that you need to move out the door. A con is that it could reduce your profit margin and eventually your cash flow. So if I buy a sweater for $10 from my wholesaler, initially maybe I marked it up to $20, but through the discount, maybe I sell it for $9.99. There goes all of my profit. So you have to be careful with discount pricing because it's easy to discount and then all of a sudden all of your profit is gone. So that's something to be very careful of. What is your bottom dollar? Another con is that customers may over time perceive you as a bargain brand and your product inferior to others in quality. Now we can kind of all think of discount stores or discount items, and you just really have to keep in mind, do you want to be the discount store? And maybe you do, and that's a selling strategy. But also think if you have the highest quality product, let's say that you use the best ingredients or you have the highest quality material, by discounting and continuously discounting, it may be a confusing message to have the highest quality material of your sweater, but now it's discounted and discounted and discounted and discounted. So there's kind of some, that's something that people don't often think about. If you really can stand behind the highest quality, offering that discount, even if you're discounting the highest quality, people often associate discounts with lower quality. So they might assume that it's not the highest quality just because it's on sale. So that's something to be very aware of and, really think about ahead of time. Do we want to be known as a discount store? One story that kind of stands out to my mind just in the marketing world is JCPenney. I don't know if any of you are JCPenney shoppers or were JCPenney shoppers, but one of their philosophies was they always had coupons. My mother-in-law talks about it was always a joke. Every week they'd get the coupons for JCPenney in the mail and they'd say, wow, look, JCPenney's having a sale. Well, the joke was they're always having a sale. But that really drove into their buyers because they had a coupon. And that's actually another strategy that we'll talk about. But then they had a new president, a new executive director of the company, and they decided that they didn't want to be known as a discount store anymore. So they shifted their business model. They lowered all of their prices a little bit. And they had a new quote saying, a new tagline, and it was called JCPenney Fair and Square Pricing. If you think of JCPenney, they kind of have a box as one of their logos. Ellen DeGeneres actually did some of their voiceover work to say fair and square. They lost a lot of customers, enough that that was a complete flop. The company lost money and they had to go back to offering discounts because they had trained everyone so much to wait for that coupon, to wait for that sale, to not shop until something goes on sale. So then when they canceled all their discounts, they lowered their prices, which probably was better for consumers, but they had trained everyone so much to watch for those discounts and shop those discounts that people just stopped shopping altogether at JCPenney. Can any of you relate to that? Are any of you JCPenney shoppers or remember kind of when they made that switch? So you do have to be careful if you offer discounts, and you also have to be careful if you always offer a veterans discount or I see a thumbs up from Patrick, thanks. If you always offer a veterans discount or a teacher's discount or a whatever it is, and then you stop offering that discount, sometimes that can be almost more offensive than not giving it in the first place. Let's say that you used to offer a veterans discount of 15%. And now let's say because your prices have gone up, rather than raising prices for everyone, you decided to not offer a veterans discount anymore. Now let's say that veteran comes in your store and they've been shopping there for 10 years and they want their veterans discount. And you say, I'm sorry, we don't offer the veterans discount anymore. They may take that personally as if you don't support veterans, which may not be the case at all. But that discount can communicate that. So I just really encourage you to be really aware and cautious of putting things on sale. And just be aware of it. Don't just mark things down to mark things down. Make sure you're doing it with intention. We have a comment from Richard. He said, I shop there for my kids for school clothes and I shop there on sale, but do not really look for clothes not on sale at JCPenney. That's right, Richard, and I do that at some stores too. I'll go straight to the sale rack and I look there, and if it's not there, that's really all I look. So we do get in that habit. There's one store I love, it's called White House Black Market, and it's a pretty expensive store for professional clothing. And I do the same thing. I walk straight to the sale rack, I shop it, and then I leave, and because I want those discounts. So that's something to sure think about. Are there any other questions kind of before we go forward? Can you please post a download again? Yes, I sure will. I'll do that right now. Are there any other questions as we're going? All right, that download should be coming. So yes, please feel free to download this and refer back to it. All right, let's share the screen again. All right, now let's go through psychological pricing. Now this is something we're very aware of, but maybe didn't know that it actually had a name. It's also called charm pricing. So this is when prices end with usually a 5 or a 9, sometimes an 8, but instead of selling a product for $10, you sell it for $9.99. Is this something everyone's kind of familiar with, right? And there's kind of pros and cons to both. The pro is it helps to play on customers' emotions. They feel like they're getting the best deal for a product. It's very effective when used in tandem with price anchoring. So when you compare both the original price and the product at a discount price side by side. So let's say initially something was $20 and now it's on sale for $9.99. That's more than half, when really it's only 1 cent more than half. But in our head, it kind of plays with that. The con is that it can seem gimmicky or manipulative to some customers, and it has a limited use. So you're not able to do it for everything. And we kind of go back and forth on this. I know we use this a little bit in Tally, not to the cent, not to the 99 cent. But let's say that we're offering something for $300. Oftentimes we will do $295 just because when you're trying to talk to a board or you're trying to talk to maybe a higher up, if one person's on board but they're talking to a decision maker, for some reason, $295 sounds a lot more appealing than $300. And I think some of that is ending with the word 100 seems very bold and hard, where 95 kind of rolls off your tongue. If you have a budget of $300 and you come in at $295, then you came in under budget, which in our industry is very important for organizations to come in under budget. So those are some things to think about. Now, from a business standpoint, if you offer things ending in 5s or 9s, you might have to have more change. Your books might be not quite as clean. When you're talking margins, it might be a little bit more confusing if you're dealing with cents. So those are some things to think about from the business side. Now, I know some companies use this to their advantage to keep track of inventory. I believe it's TJ Maxx, don't quote me for sure, but I know that when they offer new things, it goes in at like 99 when it's on sale. So let's say that a shirt is $19.99. When it goes on sale for the first time, it might go to $15.98. When it goes on sale the second time, it might go to $13.97. And then on the final sale, it might be $9.96. So from a consumer side, we don't really pay attention to those last pennies. To us, we just more pay attention to the dollars or the overall price. But if you create some kind of formula like that in your business, then let's say you're trying to decide what you put out on your closeout pricing, maybe your final fall sale. Well, you could very easily go get anything that ends in a 6 and know that that's already been there for maybe 4 weeks, 4 months, however you want to do that pricing. So there are some ways with psychological pricing or charm pricing that's an advantage to both the consumer, but it may be kind of a hidden way that you can track inventory as well. Has anyone ever heard of anything as far as charm pricing? Does anyone use any charm pricing now? Richard says, I have a mowing service where things go into the hundreds. And I have a flat rate of mowing at $50, which makes more, where I make more is add-ons. So Richard, you kind of keep your pricing just pretty simple, just end in round numbers, is that right? And sometimes I appreciate that. I'm a pretty direct person. I'm a pretty, a practical person. So for myself, I really appreciate it when things are just kind of even numbers, because then I can do fast math in my head. And again, I feel like it's not gimmicky. So it's kind of personality types. Which one? Richard, did you want to add something to that?
Yeah, well, the flat rate is 50, and where I do make my money is on the add-ons, where removing like yard cleanups, leaf cleanups, branch, I haul out branches. I don't own a chainsaw, but if a customer asks, I go rent a chainsaw and put that into their bill, so they know they're paying for a chainsaw rental, and I'm just doing the service for them.
Great. So Richard, we're going to talk about, it looks like kind of your pricing model here in a minute. So you said that you have a flat rate for mowing, but where you make the money is on the add-ons. Is that right?
Yeah.
Okay, we're going to talk about that here in just a second. So let's kind of come back to this example and talk through it a little bit more, because that's definitely a pricing strategy. Does anyone else have examples on that charm pricing where you might do something at $9.99 versus $10? Is there a time in your personal life when you buy things that you either like it that way or maybe you don't like it that way? Does anyone have an opinion one way or the other?
I can speak to that.
Yeah, go ahead.
I work for Goodwill organization, and our pricing strategies are really based on price points, right? The problem we run into is when we get to that next dollar amount, but we need to raise our revenues for the next year, right? So right now, let's say we're at $2.99 for a shirt. It's going to be really hard to go to that $3.19 next. So that strategy has to come along with. We don't move the whole inventory, right? We may just move women's tops or women's long sleeves or women's shorts. We're not going to move the whole inventory to $3.19 because that would really set panic off in our staff and our customers. So our strategy would be is maybe we just do departments at that point. And then maybe later in the year or next year, we raise the other departments. But so the strategy would be to be cautious, but also to make sure that you have your gross margin on your items that you need, your key items, right? We know that we sell more women's clothing than men. So if we move the women's section up, chances are we're going to generate more revenue.
Absolutely. Yeah. And when you go that, if you were at $2.99, you go to $3.19, that's a jump up with those numbers ending in 9. It might not register quite as fast as if you went from, say, $3 to $3.25 or $3.50. All of a sudden you're like, man, that's a 50-cent jump, because your brain can automatically do math when it comes to dollars, 50 cents, even quarters. But once you start getting into those 19, 29, 49, 79, it's not that we can't do the math, but it's not quite as automatic. And so sometimes, especially when you're dealing with a lot of items, if you have 17 items and they've all increased by 18 cents, you're not probably going to do that math. Where if you had 17 items and they all increased by $1, you can do that math a lot quicker in your head. So again, we never want to con we're never trying to do this to be deceitful or anything like that. Obviously, we have to make a profit. They know we're making a profit. There's nothing, when you go to Walmart, they're making a profit. They wouldn't be there if they weren't. So we're never trying to deceive anyone. These are just different strategies to set that profit. So let's just be really clear that when you say, Julie told me this is how I trick people. No, we're not tricking anyone. These are just profit strategies, and we have to make a profit to be in business, right? That's at the end of the day, everyone does. So I just want to be really upfront. Julie did not tell you to scam anyone. Deal? All right. That's going to be the feedback that gets back to Pete. I just know it. I'm just kidding. All right, let's go back. All right. So now, before we can set our profit or our pricing, we have to be really clear to understand our cost. So I guess before I go this, I do want to go back really quick, because it doesn't look like it's in the notes, but I do want to go back really quick, Richard, to kind of the pricing model you're talking about. So let me just look back on my notes really quick and pull up what that's called. Okay, so Richard, what you're doing in the marketing world is called cost leading pricing. So you may have not thought of that way, but it's actually a very effective pricing model, which a lot of companies use. A lot of big companies like Walgreens, Walmart, grocery stores, they use cost leading pricing. I know Hy-Vee, they have their daily deals. So this is a strategy where you may not make a lot of money. Sometimes you'll even break even. Some companies are even willing to lose money on one item to get you in the door that hopefully you buy something else that's going to make you money. Yeah, so exactly. One example that the Initiate site has is, let's say that a grocery store offers their guacamole as cheap as they can do it. So let's say they offer their guacamole at cost. Now, odds are if I go into the store, because there's a great price on guacamole, odds are I'm going to leave with a bag of chips, some salsa, maybe some queso, and then all of a sudden I'm thinking tacos. So then I buy taco shells and cheese, sour cream, tomatoes. By the time I walk out of there, I have $40 worth of groceries or $50 worth of groceries, all because I wanted that guacamole that was on sale. A lot of companies do this with everyday items like toothpaste, deodorant, floss. Someone might see toothpaste on sale and they might go to that store just for toothpaste because that's the cheapest price I've seen on toothpaste. Now, Walgreens, for example, might be willing to lose $1 per tube of toothpaste because odds are if you get into Walgreens, you're not just going to leave with toothpaste, you're going to pick up a few other things. And so that cost leading pricing, if done correctly, is a way that you can get people in the door and then make sales on other things. And you do have to be careful because if your cost leading pricing is on something that you are going to have some people that only do that minimum. There are some people that will go to the store and only buy what's on sale and then they leave. And that's okay because there's going to be other people that have all the add-on items as well. You just have to be really aware that those balance out. And then at the end of the day, you're still making a profit. So while you might not make a profit on toothpaste, where overall our sales are up. So back to your example, Richard, you said on your mowing service, you charge $50, which you don't make a lot of money on that.
No.
But if you didn't offer the mowing, you probably wouldn't get in the door to notice the branches and the cleanup and everything else. Is that right?
Yeah.
Yeah.
My mowing includes for the 50 is the trimming and leaf blowing.
Mm-hmm.
So that all includes $50.
And then as far as your add-ons, give me one example of like a popular add-on and what you charge for it.
Edging the sidewalk.
Okay. And how much do you charge for that?
Extra $5.
Okay. And that's something you're already there, right? It doesn't cost you any more gas to go to that house.
No.
It costs you a little bit more time, but not.
Because all I have to do is just change out the trimmer head.
Okay.
And that doesn't take very long.
Okay.
But that's every bi-weekly that happens. So that also it makes that customer paying $55 every 2 weeks when I'm mowing now.
Perfect. So that's a great example of, now it wouldn't be worthwhile, I assume, to drive to someone's house and edge their whole yard for $5 if they didn't have the mowing, because then that takes your time to drive there, your gas, your services, you might be giving up another job to do it. So that's something where, those add-on items may not make sense on their own. And so by getting that cost leading, the loss leading pricing in there, that's a great strategy. So yeah, I would encourage you to maybe have one thing to get in the door, but then continue to offer those add-ons. As people bring up ideas, find ways to say yeses, set your pricing so that it makes sense to make you profit, Richard.
I pull weeds for $25 an hour.
Okay.
And then the tree limb removal is depends on how much it is.
Yeah.
Because I have to pull up the trailer and then it could go up to $50 for the tree mover service because I still have to pay for the dump fee, which is
right.
$10.
Right.
So,
but once you're there, odds are they're going to go ahead they like you, they know you do a great job on their yard. So they're more likely to have all those add-on services to you versus trying to hire those out a la carte. So it's really a win-win for everyone. And again, when you can think of pricing, think of it that way. I'm already here. It's only another so much. If they were going to bring someone else in, not only would they have to schedule that and pay it and all of that. So when you think of those add-ons, think of it really as it's a win for them and it's a win for you. And at the end of the day, that's what we're always looking for in business.
Yeah, that's where you're talking about the bundle pricing. That's where, say, all that added up to $200 for one job. I could say to keep them on as a customer instead of a one-time deal, I'll bundle it to 150 for the next time.
Absolutely. And that's a great idea. And maybe they weren't going to throw on that one piece, but if it's in there, we might as well, or if it's not that much more. So yeah, those bundle packages, and you could even do those bundle with the discount. So maybe it's a, one-time thing, maybe in the month of November, we're offering bundle packages. It doesn't even have to be something that you do all the time. You can kind of combine the bundle packages with the discount packages. And maybe it's just I know we bought a bundle card from our place where we get our oil changed. And I think it was a great marketing strategy. I don't know if they just had some slow time. I don't know if they had to buy more equipment, whatever it is. They went out and they sold like prepaid bundle cards in theory, where we could prepay for oil changes at a large discount, but then we paid for it then. And I was happy to do it because from my side, that's a great discount on oil changes. And then from their side, they could go out and sell 100 of these prepaid cards. They make money right then. So if you think of it that way, maybe there is a piece of equipment you need to buy. Maybe there's something that you need the money now, but you're willing to do the work in a month or two or a year from now, whatever it is. As long as you can manage that responsibly, that's also a great way to kind of work on discounts and deals, because maybe by having that money now, that'll enable your business to grow faster or to be more efficient. So again, you have to manage that well. You have to be very careful when you collect money ahead of time. But if you use it effectively and strategically, I thought that was a great way that they bundled. They give a discount. And as long as I don't lose that card, which people do, but as long as I don't lose that card, I get a great deal, and it was a win for them as well. All right, so let's kind of keep moving along now with this next section. So let's talk a little bit about our cost. Now, again, cost is something that isn't overly talked about, and we all know we have it. So we all know that businesses make profit, and we all know that businesses have cost, but sometimes the cost isn't just what we think. So there's really two kinds of costs. And understanding how costs behave in your business is an important step to setting your prices for your profit. So we have our business expenses. Now with bundle pricing, I think that was a typo. Ignore that line. So with business expenses, we have our fixed expenses, which costs that do not fluctuate or change, no matter how much you sell. So while our insurance might change and our salaries might change, if we sell one thing or 100 things, this costs the same. And this is something really important to talk about, especially when we're talking about rent. Sometimes people maybe are selling something out of their home and they're trying to decide when they're ready to open up a storefront. Now, we always talk about rent because if you sell one sweatshirt or 1,000 sweatshirts, your rent is still the same. So this is an expense that is going to, obviously, if you divide it by sweatshirt, is going to decrease the more you can sell. So the things that do not fluctuate in production level is going to be rent, insurance, subscriptions, and salaries. Now, in our company, I own a marketing agency, and one of our largest expenses, well, besides salaries, is subscriptions. And you wouldn't think of that too much. People think, well, they're just subscriptions, but all of our editing software are on subscriptions. We have a gallery software that's on subscription. We have a project management program that's a subscription. We have an invoicing program that's a subscription. So, we're paying $99 a month here and $79 a month there and $200 a month here. And individually, it doesn't seem like that much. But for our business to run, we have to have maybe 8 or 9 different subscriptions that are up to date all the time. And so that's something to keep in mind. Now, that's also a great way to cut costs. I know for our personal budget, my husband just went through and looked at our personal bank account and what was coming out every month. And he was able to cut almost $200 worth of subscriptions out that we don't necessarily use or need anymore. So maybe, like, for example, I think we had a Hulu subscription that we used at one time, but now we're using as much. So that was a very easy thing to cut out and save that money. There was another, maybe Audible book that I used to use, but now I use a different one. So that was an easy one to cut out. So I'd really encourage you that sometimes when they're just $5.99 a month or they're just $9.99 a month, sometimes we don't think of that as an expense, but it is an expense. And that's something that because it's kind of automatic and it's a small amount, you really need to keep an account. It is a business expense if you need it, but if you don't need it, make sure that you cut that out as soon as you can, because those subscriptions can really add up to a lot, and they know that, and that's why a lot of things are on those subscriptions. Okay, we're also going to have variable expenses. Now, variable expenses are costs that respond directly to proportionally changes in activity level or volume. So let's say that I'm hand sewing stocking caps. Now my yarn, my raw material is going to change. My inventory, maybe how many people I have. My shipping costs could go down if my volume goes up, but my shipping costs are going to go up from nothing to whatever I'm selling. So it kind of goes up, and then per hat, it might go back down. But these are all expenses we need to have. Now, I know with Native 360 and just in business in general, your business plan, knowing these numbers, these are very important things. When you go talk to any kind of financial institution, they're going to want to know these numbers. And we understand that insurance goes up and down a little bit. Salaries might change. Someone might go on maternity leave. Things are going to change. But really, these basic 8 numbers, you should be able to not only know, but feel confident in. So let's say that you're paying for rent, but every time you write that check, it hurts a little bit. That might be a sign that maybe you should start looking for another place so that as soon as your lease is up, maybe you can move to a smaller or a better place. Maybe if your lease isn't up, this is a great time to try to find another business or someone to share that rent space with you. Maybe your space, there's plenty of space. So if you have a boutique, maybe you bring in another vendor and they help share that cost. Again, insurance, check rates, ask around, maybe get a couple new quotes, check those subscriptions. Again, then with salaries, make sure that that's where they should be. Make sure that your employees are working to their full potential. If you don't have enough work for them, maybe in one area, maybe there's something else they can do that's a little bit outside of their wheelhouse, but something simple like packaging or organizing or labeling that kind of helps use that salary to the full potential. Again, try your best to get your cost of material down. Make sure you know your inventory. If you're making things, make sure that you have enough of everything without having too much of one thing. Make sure your hourly wages are set and really pay attention to those shipping costs. There are ways to get those costs down now with different services. So I guess 101 in business is make sure you not only understand your cost, but that you also know those numbers. You know those numbers and you're confident in those numbers. We just have a couple minutes left and I'm on my last point here. So if you're finding that reaching your profit is difficult, let's say that every month you're just not making enough. There's a few ways that you can reevaluate your process besides just increasing your price. So I would encourage you to go through these, and even if you can focus on just one, that's going to make a difference. So number one is you can increase your sales volume so you can sell more. So if I used to selling 10 hats a month, if I can sell 15 hats a month, I'm going to make more. Now we could use some of those strategies we talked about earlier, maybe some bundle packaging, maybe some loss lead pricing, maybe some discount pricing to get those sales up. We could decrease our costs. So again, maybe by cutting out a couple of subscriptions, maybe by finding a different insurance company. There's different ways, but if we can decrease our costs, our profit is automatically going to be more. Another thing is we can decrease our fixed costs. Again, and this is what it costs to get them to make your product. So if you can find a different vendor, maybe you can save up and buy in bulk. So maybe by buying your product in bulk, you can save, and that's going to increase your profit. So at the end of the day, of all these strategies that we talked about, you really need to look at how much profit you need to make and then using these different tools to get there. I just want to show you really quick. I'm going to stop my share and share it one more time. With this initiate program here, there are tools right on here, finding the ideal price for your profit. So this link is on the bottom of those notes. So this goes over everything that we talked about in even more detail. And this is a free tool through Native 360. Another thing that's fascinating with this tool is here you have a markup versus margin calculator. And this calculator is here for you. So if I want to say if it's $10 and I want a 3%, or yeah, I want a 30% markup, it'll tell me my sale price right here. It'll also, this chart shows us what our markup versus margin is. So it kind of gives you a quick tool. So this is a tool, just this itself is very valuable, and I would encourage you to spend some time. And all you have to do is go to initiate, and then this is right on the finding the ideal price for your product and a markup versus margin calculator. All right, so it's 10 o'clock. If you need to go, we totally understand, but I'm happy to stick around and answer any questions. And I'd love to see you next week, next Wednesday at 10 o'clock. We're going to talk about choosing the right social media platform. All right, are there any questions or anything you'd like me to go over again? I can't see the downloads. Let's see. Patrick, if you can send me if you can type in your email address, I can email that to you. Or anyone else, if you'd like me to email you those notes, if you can just jot that down, I can send that off. Perfect, Ashley, we'll get that over to you too. Or, yep. Mr. Ashley, good to see ya. All right. Are you guys gonna look at pricing and profit a little bit differently now, even when you go to the store? Right, you can go and say, oh, I see what they're doing here, right?
Julie, can I interrupt for a second? I was
Absolutely.
working with Patrick and his wife on pricing his business. We were talking about this exact conversation about how to price yourself and where to put your prices at based on the services you're providing. So hopefully today was a good impact or validation of things we talked about yesterday.
Yeah. Was it pretty similar? Oh, go ahead.
Oh, I just said, yes, it was. I told my husband, you're going to sit here with me and we're going to do this together because we're going to learn today.
That's right. It's great to see you guys again.
You too. Yeah, it was everything Brent went over. It was reinforcing everything. So glad we came today.
Good. I'm glad we're on the same page, Brent, right? That's right. As far as pricing, do you feel like your pricing is set? Do you feel like there's ways that you can change to create more profit, or what are some of the strategies you're going to put in place after yesterday and today?
Julie, we sell gasoline.
Yes.
Every gas station in the nation, I think the price ends in a 9.
Yeah, that's very true. Yeah, so when it goes up, it usually goes up by 10 whole cents, right? It doesn't go up by a penny or two.
Yep.
Are we meeting at 9 o'clock or 10 o'clock the next time?
Every week for this class, it'll be 9 a.m.
Okay.
Yep. All right, Ashley Glass,
So,
what
I'm gonna-
strategies? Oh, go ahead.
Oh. So, I just printed out another vendor sheet for another glass company,
Mhm.
and another buddy of mine who also does auto glass in Rapid City says, "Hey, why don't you try these guys? They're a lot cheaper, and you might profit more going through these guys." And that's something you just said, trying a different vendor.
Yeah.
So I was on the right track.
Absolutely. And sometimes you don't know. And sometimes you look at it as, well, that's a lot of work, or it's going to take time, or I'm going to have to reach out. But if you think of it as, if you could, over the course of a year or 2 years or whatever, if by getting a different vendor, and let's say that they can get your cost down by $10, and over, 5 years, that's going to be a change of, let's say $20,000 or whatever it is. You kind of have to think of it, is making these phone calls, is spending a day, is driving to meet with this person, is that worth $20,000? Absolutely it is. So sometimes it's easy to say, well, I don't have time to look for vendors. I don't have time to shop for different insurance. I don't have time to cancel subscriptions. That takes so long. But if you really add up those dollars over time, and think about that, it is worth your afternoon. It is worth your day. It is worth working over your lunch break, because that can really, every dollar can really add up.
Yep.
Very true. Very true.
All right. Well, thank you guys so much. Brent, do you have anything to add before we sign off today? Oh, we can't hear you.
Thank you so much. Just want to thank you all and remind you that Native 360 puts these seminars on for you folks. And Pete wasn't able to make it today, but definitely look forward to and thank him next Wednesday when you join us.
Thank
All
you.
right.
Thank you,
Yep.
Julie.
Have a great day. See you next week.
You too.
Bye.